Hey everybody, just doing a little Bitcoin market update. And yeah, we're going to go over the options expiry as it's played out exactly as we thought it would, which is cool to see. Big things here just for today. Remember, we do have PCE coming out an hour before the New York Stock Exchange opens. So keep that in mind. New York Stock Exchange opens an hour before that. We have the PCE data. That's going to be pretty big, important data. Just an outlook for next week. We do have quite a bit of data coming out basically all week. We got quite a bit Tuesday, Thursday as well, non-farm payrolls, unemployment rate, and then we got Powell speaking Friday. So Q2 is probably going to open up with a pretty big volatile week, especially given that we do have quite a bit of big events, especially with Powell speaking. That's the Powell effect, obviously. So besides that, just keep that in mind going into the weekend and next week. Now, on the Bitcoin specifically, looking at the long shorts, yes, we've been breaking down really hard this morning, which was as expected, pulling us towards 85K. Why? That was the magnet we talked about. That was the max pain for the Bitcoin options expiry. So that happened about 45 minutes ago. We talked about 85K. We're there. Yeah, it played out perfectly. I'm really happy with it. Looking at a little bit lower time frame, we're getting back towards 60%. People are smashing the green button as we're starting to break down. So we'll see if we can actually hold some levels since price action, or we start having the uncomfortable talk about going back towards 80K and lower. On the funding rate side, funding rates are coming back positive. They were very negative earlier in the week. Still nothing dangerous about them at all. Just in general, there's a more balancing move. The only ones that are big outliers here really is OKX in my mind, that the more important ones. So that's going to be important, obviously. But the majority of them are getting back to positive, especially on the token margin side as well. On the liquidation side, yes, these are again notional liquidations. We are getting into the uncomfortable area, talking about like 84.5, all this stuff that we're basically coming down to right now. Realistically, we want to see holds here and bounces. If we do not, and so we don't see any gains at 87.5, 87.5 is the gain that breaks us back towards 90K. Right now, locally, you've been in kind of a bit of a sideways down move, looked a little bull flaggish, but we did break down pretty hard going into the options expiry, going towards 85K. Why? Because that was the expected max pain point, and that's where we went. So very simply, the longer we stay down here, the worse off it becomes, because everything becomes an underside retest to potentially take us down to 82, clearing the lows that we put in from last weekend. So remember, these are going to be really key to hold, but the long liquidations down here are pretty attractive from 83K down to 82K. Looking at the order book, just on the heat map side, we do have some orders stepping into hold. These guys were nuked through earlier, and people were just pulling them left, right, and center. There's some stuff stepping in here, but it's not really significant yet. We're not seeing a massive amount of long order stepping in. All of the guys that were holding price up previously during the week, they pulled them, and we talked about this yesterday. It's like or 2 days ago when I was the last stream, where they were pulling them, and it was basically just a fake move to artificially put price up, and then when the price started coming down, they pulled everything, and now we've come back down toward that max pain point. So realistically, nothing matters here until we get back over 87.5 to attack the highs. Until that happens, everything underneath us is a potential underside retest to go lower, as we've broken some local trend. Looking over at the chart, what is the game plan going forward? So we talked about the quarterly options max pain point. We still have an open CME gap down here around 84.1, 84.2. So just keep that in mind. It's somewhere in, I want to say somewhere in this area, where the CME gap still does exist. Just keep that in mind. We have broken underneath stuff on the hourly. We've broken underneath the weekly open, and a lot of this structure above us is now for underside retesting. Gaining 87.5, that is the only way we potentially squeeze to new highs, and that seems very less likely like right now until we actually regain that stuff. In the local structure, you're looking for underside retests to break down and go lower towards that 84K. We should have a potential relief bounce. We'll see how that plays out, but at the end of the day, we are retesting structure. There's untested structure below us, down at 84.3, down at 84K itself. And realistically, if we do start breaking the lows here and getting back below 84K, losing this structure, I think, starts to pop us to the downside and get us back towards testing the lows that we saw from like the 18th. A little bit higher time frame, just to kind of give perspective here. Like I said, we've had a big downside move. We had a big, really strong upside move going into late Sunday, Monday. We've cleared that. We've still got the CME gap below us. Where are we bouncing, really? So just to kind of minimize this real quick, where are we bouncing exactly? On the swing. Very nicely. right? We're testing stuff. We're right on it effectively. So we're testing the 4-hour structure that we had from Sunday, this 4-hour structure right here. If we don't hold the low that we just made, we are coming back down to 84K until we lose the low again and make new lows. If you're not in position, you want to see another continuation failure to take you lower. If you want to see a bounce, you want to see some lower time frames, probably like 1 hour and 15-minute higher lows, at least to retest structure above us. We've tested the weekly open bearishly on the 1 hour. We haven't undertied tested stuff like 86.4 and some of these bigger key levels above us. So if we're gonna have a relief bounce, it needs to happen right here, right now. And the only way to get us back into, attacking the upside is a regain of 86.5, in which case we would then look for a squeeze out. So you do have some local priority down. You've broken and made new lows, lower highs and lower lows. The 4-hour closed terribly, and we do have quite a bit of stuff above us. I don't really see us getting above 87.2. I think getting above 87.5 is a long shot right now. And if we do have a bounce up all the way back towards the daily open, I really like this area as a potential shortable zone locally, if we even get back up to it. But just remember, you've broken the local trend, the very lower time frame trend. The higher time frame is technically still intact until you start losing 84K. If you start losing 84K, you're now, if this is a change of character, that's a break of trend. So still looking okay to potentially continue in a bounce. You want to see some really aggressive shorting from the retail side if we have some regains and the funding rates to come back down towards negative as we're going up, which would in a sense influence and continue the move back higher. But for right now, you're looking for underside retesting. The weaker version of that is a continuation loss. So that's it. Take it easy and enjoy your weekends. Peace.